We got a bit of bad news today, but we also got a bit of good news next. We have several different articles weighing over the good and bad, but ultimately, I'm going to give you my opinion on what you should do as a buyer today. Also, we have a few little tidbits here and there on how to become a really good buyer and what to look for when you go buy homes. But before we jump into that, welcome to Real Estate Daily. My name is Troy, and every day I go over the latest news in real estate, housing, and the mortgage markets. Now, before we jump into it, hit that subscribe button. Boom, boom, boom. I'm going to give you the best 5 to 10 minutes in real estate on a daily basis. Let's jump into it. Now, the first article here is from CNBC. It says home sales fell for the 9th straight month in October as high mortgage rates scare off potential buyers. Yes, I will agree to that. In October, it did. October was the highest month this year in rates, but since then we've seen at least 75 basis points, if not more, drop in rates. So we're going to see a pretty robust November. Now the give and take here is that November and December are usually 2 months that are traditionally and seasonally not very good. But what I like about this year, other than the last couple of years, even though the market was hot, you had home prices slowed, sales slowed, everything slowed because the market had been so hot for 10 months that it just didn't continue through. But this month, you're going to see two things that has not happened in years and years and years. And you're going to ask me, Troy, what are those two things? Number one, home prices are falling. Number two, interest rates are falling. Hasn't happened. Guys, jump on it right now. If you're on the sidelines, let's get in the game. Otherwise, we just don't want to see the rates go bounce back up. Well, Troy, why is the rates going to go bounce back up? Well, let's go over the next article. Fed Bullard says rate hikes have had only limited effects on inflation so far. Well, when you look at the numbers, you look at the raw numbers, it doesn't show that it's done very well, but the CPI number keeps coming in lower. Why? It's because the government, I feel the government adjusts the numbers, to make things look better than they actually are. And that's what happens. I've been saying this now for the past 6 months. You see that the Fed comes out, they have their numbers, they raise rates 0.75% or 0.75 bips. And then what happens? Everyone gets happy, stupid happy, drunk happy. They're at the party. It's late night. They haven't figured out what's going on. They haven't seen that good looking young lady or guy over there, and they start drinking and drinking and drinking. And hey, now they're all happy again. Hey, they start talking to people. It's almost as if we do this over and over and over. The Fed has not given us any reason that they're going to stop raising rates or pivot, yet we get punch drunk every single time a couple days afterwards. It makes no sense. So then you have the Fed's coming out and saying, well, it has only limited effects. I don't care what 7.7% says on the CPI. Guys, understand that. They're going to go fairly aggressive here in the middle of December for the 14th and 15th. I think they're going to raise it maybe, I said yesterday, 50 basis points. I still think that 75 basis points is on the table. It's the media that's giving their narrative of everyone's losing their jobs, but also they're giving narratives as everyone's buying everything. So those are the two things that have to clash. Got to figure it out. The Fed will. Now, some good news. On DS News, it says the share of distressed homes sales shrink in October. Yes, I've been saying this. We've kind of peaked out now in bank-owned properties. Here in Southern California, we have about 209 actives as of Monday. 3 weeks ago, it was 209 as well. So we kind of flattened out. Now, I will say this, being in that distressed REO market now for 15 years, I sold literally, I listed, I've been with the banks, hundreds and hundreds of bank-owned REOs. Traditionally, they do not foreclose during the holidays. Yet this year, I think foreclosures will happen, and I don't think they're going to slow them down. The actual act of knocking on someone's door and kicking them out, I think that actually stops typically somewhere the last week of October, and then gets really ramped right back up in January. We're going to see if this is the reality that's going to happen. But right now, we saw that it shrunk in October. Next article says housing industry continues to shed employees in economic turndown. So with that being said, I think what we're seeing here is that the housing industry, was way oversaturated. I mean, literally oversaturated. And companies, if you're laying off people now, you didn't get it. You haven't gotten it. You should have done that 6 months ago. I wanted to see the industry kind of just wash itself out 6 months ago, but still, you're going to see, 64% of American financing corporation gets pink slips. Come on, we should have had that at least 6 months ago. You got to be forward looking. There is no way that we're looking at this refi boom coming back. So if there's no refi boom and sales are shrinking, you're just going to go through a bad time. And if you're laying people off now, it's not a good look. Especially, why are you doing this in November when people are looking at, the holidays? If you would have laid them off in June, then they would have already jumped on another job, probably a fairly good job, and they would be happy right now. Instead, let's go lay people off in the fourth quarter. That's not a good look, and it's not forward thinking in our industry. Now, the last is our interest rates. Interest rates are flat. The only thing that continues to go down is the 15-year conforming, which I felt was way out of control. Way out of control. So now it went down 20 more basis points. It is under 6. But look at it, conforming, conventional, it's flat. FHA, flat. Jumbo went down 20 basis points. That's actually good. It actually is almost on the conforming level. So the risk out there for people, for banks now, they don't see that risk going crazy. Again, who knows what's going to happen in the future? I think that the Fed has plans to raise rates now for the next, 6 times they get together before we see any kind of slowing down. I really feel, even though at the layoffs, it's going to be nominal layoffs. I mean, you haven't heard someone lay off 100,000 people. You're hearing 10,000 here, 10,000 there, and you're hearing it in the fourth quarter. So it's spread out. It could go into next year. Who knows? But it just hasn't really shown up in any of the unemployment numbers whatsoever. Last month we saw there were over 10 million open jobs, and markets getting all excited about 10,000 people getting laid off. And with 10 million open jobs, guys, this is not. What are we thinking here? None of that makes sense. So, well, with that being said, I hope everyone has a fantastic weekend. If you like this video, hit that like button. Otherwise, you can leave a comment below. If you would like to know what's happening, you have any questions in real estate related, please leave them in the comment section or DM us. We are also on Instagram. We're on Facebook as well as TikTok. We're more than happy to answer any of your questions. Otherwise, you guys take care, and I will see you on Monday.